Yo, what's up everyone? Welcome back to another video. Today we got another daily market recap. The date is Friday, March 27th, okay? Gonna be going over it. So let's get started with. First up, start off in the daily time frame. And we see markets very bearish recently. We have Iran war nonstop headlines, which is causing the market to dump a lot. Okay, so we keep that in mind. So what does that mean? I'm going to be more inclined to taking trades on the bearish side of things because I like to play with the market, right? I'm just going to win more. The probabilities are more in my favor. It's very simple, honestly. So 4-hour time frame, let's get started. So where do we need to see here. We need to see where's the 9 a.m. So yeah, we're right here. Okay. Draws on liquidity are like kind of mid because we're using draws that are like from like months ago. And when you do that, it's kind of harder to it's kind of hard to target stuff because if it's so far away, you don't even know what to target. So honestly, I'm not even going to use the draws. I just go with the momentum here. So, another thing I'm going to say is this. In this case, when we're just going so heavily down and we need to use all these other draws on liquidity that are far away, I would go lower on the time frame. So I would use instead of I don't even, the daily's not going to tell me anything here. 4 hours not going to tell me anything. 1 hour. Again, in all of this, right? What is the 1 hour going to tell you? We barely have any 1 hour draws. There's so many candlesticks. The candlesticks are all so big that you want to use smaller. So even the 15-minute, bro, in this leg right here, genuinely explain to me what I can target. There's nothing. You got to zoom down. You got to zoom way down. 5-minute time frame. Okay, now we're getting somewhere. All right, so let's get started. So the market opens right here, right? Which is why I don't have much marked out on my chart. There's not many drawings. So 9:30, right here, right? NQ, okay. I use ES for, SMTs, and because it's a correlated asset, but I don't really take trades on it. I like NQ more. It's more fluid, more volatile. Okay, so we start off in the day and we have a big bearish move lower. Awesome. Okay, ideally what I want to see is when we're so bearish, a pull back higher, right, to then continue going lower. But sometimes we are so bearish that we don't even get that, which is literally today we just opened, we went lower, then we did get a pullback, but we didn't even pull back into a 1 hour fair value gap or a 15-minute gap, and we didn't get a significant pullback. But honestly, I don't need much. What I got is this. This is what I see. What do we create right here? 5-minute fair value gap. We got one right here. It's created. So price comes up, fills it. From there, I just want a simple small short out of that off of a really nice clean inverse there. So we get it here, we get the top right here, and I was waiting for this inverse, looking to enter there. But then we go higher, we resweep this 1 minute high, which gives me even more confirmation. And then we have, what I said, I need a really nice closure. So a big black volume candlestick, you know what I'm saying? That will but it will not even, it won't just inverse it. It will go so down that it takes up part of the trade. You know what I'm saying? So to the point where you start losing RR. That's what I want to see. So I see this here. From there your stop loss can be at the up here. On the 1 minute, I like to put it on the highs, right? Just to play safe. I'm on such a low time frame either way. And from there, super simple. There's only one break-even point. It's literally this right here. And then TP just has to be a 1-to-1. I'm not going to target some like 5-minute high, like again from months ago. That doesn't make any sense. Or sorry, 5-minute low from months ago. So yeah, just a simple 1-to-1 with the break even right here. And as you guys can see, it just goes all the way down. From there, you go down, back up, and then we get the classic chop. Honestly, that's it. There's literally only one setup. Like, I'm not even sure there's like only one setup today. I don't know who wants to be trading in this. I don't know who's going to find anything in this. Like, 5-minute. Okay, again, you could keep taking more continuations. Like here, we create another 5-minute fair value gap. We tap. Well, no, actually, no. If you can see right here, we actually create. Yeah, we create a 5-minute here, a small one, and then we inverse it. I'm not gonna show it when we just inverse a 5-minute. We tap this, then we go lower. We get the classic chop. So that's honestly it. I like take that trade if you want. Don't listen to me though. I have no clue what I'm talking about. This is not financial advice. Also, like I didn't even invent any of this stuff. So yeah, that'll be it though.